What's up, guys? It's the last trading day of October. Well, this month flew by really quickly. Hopefully, you guys had a good month. I hear from a lot of traders I trade with every day that October is like their record-breaking month. So congratulations if you took advantage of all the volatility we had. And hopefully, November picks up even more. For me, I had a pretty nice month in October as well. It's gonna definitely be enough to pay for central heating, by the way. Like, finally, I can turn on the heating. Whew. Isn't that what life is all about? Making enough money from trading to pay for heating and pay for ramens. Who cares about all the Lamborghinis or the fancy jets, right? But seriously, food is the only thing I'm willing to spend a lot of money on just because I enjoy it. So let's talk about the trade on Thursday, SRRK and UUU. So SRRK, I took a loss on the short side. I know a lot of people were trying to short this. So was I, because the stock is very extended. We're holding above previous day close, so we're red on the day. And also the offering price was down at $39. So that's why I was short bias on it. I took the loss on it, but it's the best loss ever. And a lot of times, these are some of the best trades. And let me go through that really quick. I did take a loss on starter size on the long side first, seeing that they were not going to support the bids, and we just dropped to red. So that's why I cut it immediately. And that's why I started scaling in short. Shorted some small, reshorted, covering some, just in case we go red to green. But that failed, so I added back into the short position. The idea is that we're going to test this $42 level, like, 42 right here. If you draw a support line around. The idea is that this is the key level to hold. Once we're holding red on the day, basically below previous day close and around $42 mark. This is the key level. And I'm thinking the plan is that they are gonna fail this level and we're gonna flush down to $40 low of the day and potentially even lower to $39, $38 or below. So that's the plan, and that's why I was scaling according to my risk, and I was prepared for it. But the fact that they held it on for so long, and you can see, even though they keep on making lower lows, the bottom, the weakness, keep on getting bought back up. So, when that happens, I want to be careful, right? It's not really going according to my plan. I wanted to see immediate follow through to the downside. And when a lot of times when these stocks, the setups and the plan you had, the stock is not exactly working according to your plan, I'm usually very good at spotting that, okay, I might be wrong, and I'd rather take the loss. And so I took the loss. I'm not saying it's fun to take losses. It's definitely not fun. Whether it's 500, 1,000, 2,000, a loss is a loss. But, looking in hindsight, of course, I'm so glad I took this loss, because after I covered everything, the stock just squeezed from 42 all the way to $46. If I didn't follow my plan, if I didn't stop out, take the loss, I would have been down huge. So this is why a lot of times the stocks where you stop out for a small loss, according to your plan, even though it's a loss, it's some of the best trades in my opinion, right? If you get into this habit of, having a plan and just trading according to that plan, and when you're wrong early on or later on, cut it for a loser according to the plan, your losses would be very manageable. So for me, even if I take a $2,000 to $3,000 loss on this, it's fine. Like, it's part of the plan. But if I didn't stop out, this would not have been fun, right? So, I think this is also the reason why my risk management and my losses are very small and very controlled. It's because I much rather take the loss early on. I much rather take a loss and look for potential re-entries later if I was going to be right later, instead of holding for it has to do this, it has to sell off. The stocks don't have to do anything that you and I want, right? This is the market. We're not bigger than the market. We cannot, just fight the trend, fight the stock, especially when this stock, the last 2 days has been one that, spikes up, drops, and then spikes right back up. So, learned from the last few days of price action and want to be prepared. If I lose, then it's a loss that I'm willing to take. But I'm actually very proud about this trade, even though it's a loss, right? For a lot of new traders, they wouldn't understand why taking losses are sometimes good for your overall trading. But for the experienced traders, sometimes you have to understand that the risk of being squeezed out, it's just not worth the reward, even if it tanks later to $40, $38, right? So that's just something I want to share with you guys to kind of understand how I think when I'm trading these setups. Second trade from yesterday. The other trade from yesterday, this is a very straightforward trade because I'm very patient on the trade. You can see I didn't trade, it didn't enter at all at the open. I pretty much left it alone until 10 o'clock. That's because, I was first of all focused on, SRRK and, took a loss on that. But, this is a low float stock that gapped up to 4 and all the way to 5s. And a lot of times with these low float stocks, that seems very crowded already pre-market. I know a lot of people were getting squeezed on the short side. A lot of people were long. A lot of chat room was in it. So most times when a stock is crowded, I prefer to leave it until, it's clear that it's either going to squeeze or drop. So for me, UUU, I left it alone. I saw that spike to 5s and it failed immediately down to 420s. But I saw that it kept on holding and then squeezed again and then dropped right back down. So that tells me a few things, right? There's some small consolidation, small bids around 420s and a lot of offers, a lot of people selling it around 480s and $5. So it's essentially in a channel, right? And if you think about it, these kind of stocks, low float stock, easy to manipulate. I'm looking at the stock, looking at the daily chart, a lot of rejection around the highs. So basically, that's why I scaled in short on the spikes to $5, thinking that, okay, we're going to scale in short around this area. Unless they really consolidate around the 480s, then, if it consolidates 480s and $5, then it has a chance of going back higher. But this wick right here, you can see after I entered, I was watching the stock closely. Very nice spike, from 440s all the way to 5s. But the moment it hit $5, if you were watching the stock, you can see that they spiked it to 5s, and it's like somebody just slapped that thing in the face. It just got slapped, and then it just dropped all the way from 5s down to 440s. So that's what I was thinking, okay, this stock is probably gonna tank. They're gonna pull the rug, right? So that's what gave me the confidence and the conviction to hold it. I could still be wrong, right? If it goes and, like I said earlier, if it starts holding 5s, then I'm gonna cut it for a loss. Totally fine. But the fact that it kept on holding and then the highs just got lower, slowly they pulled the bids. When they pulled it, this thing dropped from 450s all the way down to 4s. I didn't cover because it's very heavy at that point. And we actually got all the way down to 350s. I'm actually really proud about my own patience on this one because essentially I was up over $1 a share. So I'm very happy about this. And I shorted some small on the bounces and, held it to as low as 310s and covered the rest at the end of the day. But this is one of those situations where doesn't matter if you're long or short bias, you can learn from this price action, right? If you're long, then maybe you don't want to chase the tops. You don't want to chase these kind of spikes. This is the kind of stock that you don't want to buy the breakouts. And most stocks, most low float stocks, you don't want to buy breakouts. So, just something to take away, something to think about. But very nice trade on Triple U. So some trades today, 2 losses and only 1 win. So let's go over the losses first. BLRX. So this one I lost 2 times. Over here for small size and down here. The idea is that I want to short this thinking that we're gonna fail. Kind of like how we just talked about for Triple U. Didn't work out. So I covered some here and then covered all of it here. I did pay myself some. But of course not enough, right? But I'm very happy about cutting the loss because the stock just later, went, even higher all the way to $3. So this is another situation just like SRRK. When the trade is not going according to your plan, it's better to take the loss early on for a small loss, predetermined loss, than to keep on holding it, because that loss will be 2-3 times bigger. It's actually very satisfying to see a stock going to $3. This is the kind of mindset you have to develop for yourself slowly, right? Sometimes it's just not worth holding on for the, oh, maybe it'll drop. Well, what if it doesn't, right? What if it keeps on going to $4 or $5? It's always, you have to prioritize the risk in trading. In trading, the best traders are the ones who think about the risk first before the reward, right? And whereas a lot of new traders, they only see the reward, but they don't take into consideration all the risk that could happen. So this is a loss, but I'm really happy about the cut. I did go back in small for a small scalp, but overall, this ticker is a loser for me. Second loss on the day is NIO. This one had a small green trade on the scalp on the long side, but after that, I wanted to scale in short, thinking that we're gonna follow the market. Market is really weak today. All the tech is selling off. Tesla is selling off as well. And of course, I'm short the only stock that's not really following the market. But I did pay myself along the way. I took a loss early on the short side. You can see got squeezed out. But once we failed at $31 again, we failed the highs. That's why I went in shorts, thinking that we're gonna, at least test the low of the day. You can see I paid myself along the way. I'm never even though I keep on adding, but I'm really careful knowing that NIO is a very resilient stock. I'm very happy about the cover here, $30.20. We didn't go ever to test the low of the day at $30 or $30.10 ever. So it was very, very strong relative to the market. So, once it didn't work, I am paying myself along the way, trimming my position when it seems like it's going to break out. But I keep on trying to add back to a core short position. And around this point, I'm just like, okay, they're probably going to keep on grinding it back up too. So took it off for a small loss, and the final piece stopped out. And it's a good stop, I think. I think it's just going to chop around in a range. So even though it didn't work out exactly to my plan, I took it off for a loss, still paid myself along the way, but still a pretty decent trade in my book. Last trade, EQ. This is the only stock I made money on today, but very good range compared to BLRX and also NIO. This one is easy to borrow, so that means, a lot of brokers have this for free. When easy to borrow stocks, you want to be careful, because that means when it drops, a lot of times it just squeezes back up, right? Gotta be careful about that. So I shorted some small, $7. It tanked. I didn't cover until here, thinking that, okay, they're probably gonna try to squeeze it again, right? If you look at this price action, higher lows, some volume coming in. So I covered. I reshorted the spikes up here, $7, $7.40, $7.30. So this is what I mean by easy to borrow stocks. They like to spike a few more times until eventually it'll give up. So you can take that into advantage whether you are long or short. So that's why I shorted around 7s and then 7.40s. And it flushed down to 680s, 690s, and covered everything. Should have let it ride out a lot longer, but liquidity was drying out, and easy to borrow stocks, right? I want to be careful in case they try to squeeze it again, but they didn't. They just faded off to $6. So time for our Q&As. Eric is asking, when you say the stock is heavy, do you mean lots of offers at the top from people taking profits from the big opening move? When I say it's heavy, it just means there's a lot of selling pressure. Yeah, it could mean there's a lot of offers at the top, but I'm just talking about at the moment, right? The stock is selling off. Everyone who's long the stock is hitting a bid to get out. And it's not necessarily about reading the level 2 or the tape. Though, yeah, that could definitely help, but I'm just talking about the price action of the candles. Every single, bounce, it's got pushed down, right? If you just observe the candle, observe the charts, it just, couldn't bounce, and each bounce it got slapped right down. Kind of like how we talked about triple U earlier, right? And also, if if we're talking about level 2 and the tape, you see a lot of red prints. That's printing on the bid side. So that means everyone's selling on the bids and trying to get out of the stock. That's when the stock is heavy, and you don't want to be long a heavy stock because you probably gonna tank lower. Mark is asking, I'm new to buying stocks. My question is day trading good for beginner? And how do you trade on Weibo? Thank you. I mean, everyone starts out day trading as a beginner, right? I once started out as a beginner. You have to start somewhere. That's the same with anything else in life. You're always going to be a beginner, when you start and when you're brand new, right? And that's why, you need to focus on learning if you're a beginner. I think, no one starts out day trading as an expert. And how do you trade on Weibo? I don't think you should day trade on Weibo or Robinhood. I understand a lot of people are doing that, but if maybe it's okay if it's like, 50 shares, but I think, or like 100 shares, but anything more than that, I think it's worth, using a real platform. Just because the fills are going to be slow on these commission-free brokers, you don't want to be saving pennies and losing thousands, right? So for me, I pay, a couple hundred commissions, sometimes even more each day, but it's very worth it. But, I do understand a lot of people start out using Weibo and Robinhood. I do use them sometimes for swing trading, small position, usually the tech stocks and the blue chip names. So I think that's fine for swing trading. But for day trading, especially, in a volatile market, I don't recommend using those free commission brokers. But I do use Weibo. Speaking of which, they're having a promotion. If you sign up with Weibo in the United States, then you can get 3 free stocks. That's pretty decent. I know someone who got a Google stock for free, so he pretty much got like $1,600 for free right there. So if you want to sign up and take advantage of the promotion, you can use my link in the description below. It's available for the Americans, or if you have US status and who doesn't like free stuff. And one last question. A lot of people are very concerned about my plant, and I have it right here just to prove you guys that it's safe and healthy. And I should probably water it this weekend. Maybe, if I remember. Thank you guys for watching. As always, if you enjoyed the video, please remember to drop a like and subscribe. Thank you guys for watching, and I'll see you guys next time. Hey guys, thanks for watching. I hope you enjoyed the video and the bad jokes. If you want to see more day trading content, make sure to subscribe and follow me on Twitter and Instagram for more. If you'd like to trade with me daily and get my free weekend watch list and trading journal, make sure to check out the links below for more resources. Stay green, stay positive, and I'll see you guys next time.